Good morning, everyone. Mike and Corey are here. We're not in the same office like we were just yesterday. After a week of travel, it's good to be back in Ohio, a little colder than Texas. Today, we got some exciting topics. One is we got cited in a news article as far as one of the positions you may have seen move in your account was MMKT replaced with USFR. This was actually picked up through Bloomberg. So I'm going to cover that article real quick. Then I'm going to talk about, we have our March Madness, we have basketball, we have our financial one. As much as I want to say we do it like Warren Buffett, I'm going to show you his March Madness, and we'll talk to Steve about it, but we don't do it like Warren Buffett there. And then Corey's going to talk about some of the markets coming up. Yesterday you saw was a beautiful green day, which, after a lot of red, you're glad to see. At first glance this morning, it's up again slightly, which is good that it's continuing there. And Corey's going to talk about some of the gapping up, which is a good thing to have. But as we get started, this is a financial education presentation. You must do your own due diligence on anything you hear in this presentation. More disclaimer information can be found on ankerstarwealth.com, and the opinions expressed are mine and Corey's alone. So yesterday, a few of you saw this, and I know Steve put out a news release that our company, or I actually got a quote in this article. So earlier this year, we were in a position called MMKT, which is a money market account from Texas Capital. Schwab blocked us from buying any more and gave us restricted sell only. So we had to call in to sell anything. When it comes to rebalancing accounts, that makes it almost impossible to really do anything automated. And hence we sold out of that position and replaced it with USFR, which is a similar one. No performance, issues with your accounts, just a little bit of a headache is what was our quote. And this was my favorite screen for the article, stop, that you can see there. But anyways, this article was covered that Fidelity and Schwab did both this on both BlackRock and Texas Capital. And I was interviewed and gave a quote on this to say we have not seen this with other ETFs. And basically it said we sold out of it. So disappointed that it was sell only mode with Schwab, kind of created a headache for us for a little bit, but operationally we worked through it and did a block sell to move out of that position. So the main thing is we got picked up in this article. So this article was on Investment News, and then this article was on Yahoo Finance, and I think it was picked up a few other places. The actual article and Ankerstar Wealth was mentioned. So I thought that was kind of cool. Kind of nerve-wracking to see your name listed there, but I don't know, Corey, hopefully your name, when it gets listed or has been listed, it's in a positive aspect. So
Yeah,
what do you think, Corey?
Out there,
No mugshots. Yeah, in today's day and
or
age.
if you find one, that is AI, I promise.
Oh, it's a deep fake. There's a deep fake on Corey. So anyways, Corey, I don't know if you saw this article, but I had some people reach out to me, people we work with, to say, hey, wow, you guys are in this article. So that's it. If you want a copy of the article, it is on the Ankerstar Wealth as far as the LinkedIn page, the Facebook page, and that you can see that we got cited. The other one, in more exciting news, since this was just an exchange of money market and treasury funds, more exciting is today is our deadline to get your 4 stocks in for the Ankerstar Wealth stock picking March Madness. I'm getting several emails. You should have an email, probably if you're watching this, you should have an email that you can just reply to with your 4 stocks. All you have to do is reply back with 4 stocks. You don't have to fill out a bracket. It's as easy as picking. There's no cost. And to be honest, there's a lot of luck to this. But send back with your 4 stocks. We're getting a lot of them in. I haven't tallied them all up yet. I am seeing some trends, but I can't release those trends until we get everyone's in. But tomorrow will be
a hot pick.
Yeah, I'm not going to tell you because otherwise you'll be picking that too. We're not going to let you front run. So, but I saw that Berkshire Hathaway and Warren Buffett does a March Madness at his company. but the employee that wins it gets $1 million. So I don't think Steve's gonna have this. I'm all for the employees winning $1 million for a bracket. The key with Buffett's, and he made it easier because it used to be you had to pick perfect into the Sweet 16, which no one had ever done. So this is the first time in 10 years that someone won the prize. They lowered the things. I think you had to get at least 30 out of 32 games right. Well,
Wow.
anyways, someone got 31 out of 32 right. I don't know which one they missed, but they won $1 million within his company. I guess Warren's pretty supportive of this. I mean, putting $1 million up is no small feat. I just had to laugh because I was like, wow. It actually said that he had 12 employees get 31 out of 32, but I guess the one person won the tiebreaker. That winner
Wow.
went on to pick 44 out of 45 games correct. Wow. So I'm not sure which game they missed. There was a few upsets, but and the other people each got $100,000. So, anyways, Warren Buffett, and if you look at our stock game, I think they're a 2 seed, so that means they're in the top 8 largest market cap companies. Berkshire Hathaway, they take March Madness seriously there. I mean, slapping out a couple $1 million in prizes. So I thought that was fun. So as I said, and if you're hearing this and you're not on our distribution, feel free to email me at mike@ankerstarwealth.com and pick 4 companies that are big companies, and we'll enter you in as well. Tomorrow will be the first round, and then Thursday we'll report out on which stocks were eliminated. So with that, Corey, take us to the green news.
Yeah, we do have some good news. So I shared a week or so ago some of those charts, some of those key levels, some of the things to expect. And one of the things that we talked about was those average corrections in the market being about 14%. And we never got to a 14% drawdown, or at least not yet. And I guess at this point, we've now run some and may never get to that 14% drawdown. Yesterday was a pretty important day for a few reasons. We reclaimed the January low. We also reclaimed the October high, and we did it, and we reclaimed the 200-day moving average, and we did it in what's called a gap and go, which is a bullish type of day where we opened about a 1% higher and moved even higher throughout the day. This is on the S&P 500. I would consider this a test. It's a test of reclaiming those levels. So you'd like to see strength remain throughout the day. But man, a big gap up yesterday. And you can actually see, if you look really close, we gapped above those prior levels from just a couple of days ago. So we didn't even flirt with those levels. We just blew right through them. Couple more interesting charts. Amazon had a high last summer of $200 a share. It blew through that in November, retested it in December, and then it tried to test it in March, but broke below. But yesterday, it gapped, didn't even touch it. It gapped straight above that 200 level and continued to move higher, and this morning continued to move higher again. So an interesting breakdown, but man, reclaiming that level in that way, very impressive. And then one more, you saw Apple with a really interesting breakdown, tested that 220 level in last summer, last September, November, January, and then it broke in March. But it also gapped above the 220 level and reclaimed it yesterday. So, they call this, is it a false breakdown, where it looks like, oh, the stock is broken, but then you get a quick snapback and the market's saying, no, just kidding. It's not broken. So that's what I'm seeing. All really good stuff. I could go through 10 more charts, but quite a few of them look similar, quite frankly. So that's what I've got, Mike.
Yeah, and I think it's important to know. So when you look at the S&P 500, it's a market cap weighted index. So it's 500 companies in it, but they're not equally weighted. So the biggest companies, who are Microsoft, Apple, Nvidia, Amazon's definitely in the top 7. When those move up, and that's why you can just look at a couple stocks and see that the index follows, because they are higher weighted than somebody that's number 100 495th. So we'll continue to watch that, and plus, just our aggressive models have direct holdings in Apple and Amazon, as some of you know that. So good stuff. We'll continue to watch where this all goes. Last week was a positive week. So, for those of you that are like, oh, my portfolio is off 10, 12%. I mean, the market was off not quite 14%. The NASDAQ was. But, it looks like maybe, and we can't say for sure, maybe we've set a base and things can start to move ahead. And I did hear another thing on the positive side. I know for the first, last 30 days, tariffs, we hear lots of tariffs. I heard the financial markets are getting what's called tariff fatigue. Like, okay, we know there's a lot of stuff happening with tariffs. New talk about tariffs isn't going to cause the market to be as nervous, because we're getting used to it. We're getting used to tariffs being out there. Therefore, they're less newsworthy. So anyways, I just thought I'd share that as well. So with that, I hope everyone has a great rest of the day. We'll talk to you later. Bye.